Yo, what's up, guys? So let's do the fundamental of NSD New Zealand dollar, which is the NSD USD, and we're going to go to the weekly time frame. On a weekly time frame, we want to look at the fundamental aspect of this pair. It's been a while, and I'll just go directly to my tools, and I'll be looking at the retail behavior and the commercials. So look at these. These are the retailers' net position, actual position in the market. So this is not the prediction of where the market is going, but this is the actual position, the market. And we know that mostly when we're looking at this first information, we know that this is just the actual position. If they are selling, we know that the market at some point will do the opposite. So if we look at this zone, completely they are very, very bearish. Let me use a different color. They are very, very bearish here. Compared it to previously, they were bullish. Previously, they were bullish. Here, they are bearish. And if they are bearish, we just want to see what the smart money will be doing. Like here, where they were bearish, the price went higher. And here, they were bearish again. Price took some time, went higher. Here as well, price went higher. Every time they are selling, we get to see the price pushing on the opposite direction. And even here, we can do this all day long, but I just wanted to check out this one. And again, I want to look at the hedge funds, right, or the fund managers. Want to see what they are doing. They're also following the trend. They like following the trend, so they work together. So we'll want to look at this. And here, we can see all of them. They're always trend following. And every time they are bearish, price will do the opposite. Like, look at this. Here, we had a bottom here. You can see some green candle there. And this being on a weekly time frame, so it's not something small. Being on the weekly time frame, here you can see the price went higher every time they're selling. So this is the actual position of retailers in the market. And having just this, we know that at some point we're going to get a buy position, but I don't know when. So let's look at the smart money as well. Smart money should be doing the opposite. And look at the commercials net position. You can see how bullish they are. And we know that if these guys are always right, every time they rally to the upside, we must get a push to the upside. So expecting a push there. And here we go this when they were bullish like that, we go that push. This one, I think I need to change the color to red here. And here again, when they were bullish, look at that, the price went higher. Price went higher. And every time they push to the upside, look at this. Every time they push to the upside, we'll get the market responding to the upside. Okay, here again, you can see some green candles there. And here they were bullish. And even lastly here. So these guys are always doing the opposite. So if they are pushing to the upside from the data we have here. From the data we have here, that these guys are very, very bullish. If we look at the direction here, very, very extremely bullish. Then you want to bring in the index and you want to compare with the index. And the index will just help you to see their strength. And you can see according to the index, these guys are very, very bullish, 100%. Retailers are extremely bearish on this other end. So what to look at this time, every time we cross this green line above there, this means that the commercials are really bullish and retailers are on this other side. So if you are trading, you just need to go in neat technically and look for a change of character, then prepare to buy. You can see last time they were here, they were bullish. Now I don't know here, I'll use a different color. Let's take green. So when they are bullish here, this one is also bullish. Net position, we expect a push. When they were bullish and here on the index, they were bullish, we got that push to the upside as you can see there. As you can see, let me do this. And see the price went higher. And again, where here they were bullish, look at this. Here, very small, but you can see the price went high. and here they were just here bullish, but you can see the index, they were almost there, touching the index. The retailers on this other side did not even touch it, and the price went higher. So when we look at this pump, this one here, and this one, the price went higher. So according to this, we know that we're going to get a push to the upside, and actually we can look back into this particular position on these commercials because they take time to position in themselves. So you can look back up to 3 years time, for example, this just 6 months. So you can look at it to 1 year. Want to see if they are still bullish. 1 year, if they are still bullish. Let's see, what do we get here? You can see they are still extremely bullish there. This means that if you get a pump to the upside, it will be a very, very nice move. Then you have 104, that is 2 years. And in 2 years' time, these guys are still bullish, and we can look back how they've been positioning themselves in the last 3 years. That is 156 weeks. 156 weeks. 156 weeks, and we can see that still these guys are extremely bullish. So after having that, we can look at the valuation of the dollar. Valuation, no, not before the valuation. We have to look at the seasonality. Seasonality, what do we expect? Here on seasonality, we want to see what are these guys planning to do, and I'll just switch some few things here to 52. I want just to use 1 year, right? In 1 year, we can see that according to seasonality, we're going to get actually a push to the upside up to around, a push is going to come in from around date 26. Don't know when, around 26 up to around January 25. So we're going to get that pump to the upside, but this is just a focus. It's not that it's going to tell you exactly this date, but you have to see that you're going to expect that push to the upside. Let me use 26 here. So to get a push to the upside, use 6 months. They're gonna go down before we go higher. So this is not actually the real focus, but actually something that you should expect. So let me use the other tools here, right? The other tools here, and we want to see what will happen here. Just a minute. So you can see. So you can see according to this is the seasonality of the New Zealand dollar, and this is the month of December. And we see on December, we expect the New Zealand to really rally to the upside. New Zealand to really rally to the upside, though you can see it like there's a small drop before the push to the upside. So our focus is to look for a long-term direction, which is fundamentally driven. And I can still see that same focus that we're going to get that push to the upside. So let's go and look at the valuation of the dollar as well before we put in our technicals. We already did the technicals, so you can watch the other video that has the technical analysis. So let's look at the valuation of the dollar. At least we have a lot of things I've checked. So look at the value of the dollar. We want to see the dollar being undervalued before we get to start expecting that to buy position. So I'm going to look at it short term. Right, short term. And you can see according to short term, we undervalue here, which we expect a push to the upside. And about long term, mid long term, right? So if you look at this long term, we can see we are also undervalued. This means that we should get ready to expect a push to the upside. This pump to the upside is not known when, but at least we know that we're going to get that push. So you can see when we're down here, we expect this pair to buy. It was down here, but you realize that the time it came here, the market did not hold anything, did not hold water. As you can see, some green candle there, couple of times. But being a weekly time frame, it was a good move, but very small there. So this was never good. But we can see every time we are undervalued, we'll always get that push to the upside. For example, here we are undervalued, we get that sharp push to the upside. Again here, get that push to the upside. Every time we are down here was the dollar. This, whatever I'm looking at, this guys, this is the DXY, right? This is the DXY, the New Zealand dollar. Yeah? So this is just the dollar index. And you can see that we are undervalued versus this dollar index. And here, so every time we are undervalued, we'll always get that push to the upside. Look at this one as well. Took some time, but went high. So this tells me that according to this, I'm going to get that push to the upside, which I don't know when, but I'll get it. We'll get that price pushing higher anytime soon from now. So as well, let's look at the, I don't like looking at the DXY, but let me just have a look at the DXY as well. Okay, so I already did some few technicals here on my DXY, and I'll just take you through it very quick. I'll take you through it very quick because I already did the analysis already. I'll take you to a monthly time frame. Show you what I have here. So according to this, I have a break of structure here. We have that inducement there. These are low protected. Price went higher. Can see price seems this structure. Price was like, because I did not get to see the data on the previous structure here. So I had to look at this level when it was broken. Then this is my protected high. Okay, protected high. So price again gave me the inducement when the higher, took out the inducement. This was the low. Then when it broke this low, this was my protected high. So according to this monthly time frame, inducement, this is a major inducement actually. This is a major inducement. There's a major inducement taken out, this is our low, but price should not violate that high, but we have a supply zone there. So look at this market on internal structures. If we go back to a weekly time frame and we're trying to look at the way the price is going towards that supply zone, towards the supply zone above here, then we can see it needs to take out what we call a major inducement taken out high. Now this is our low. Price breaks the major high to the upside there, like that. These are protected low. Price played around and came down to take out again another major inducement. Actually, this is not a major inducement. The major inducement is actually this particular low here. This is my major inducement here. But this inducement is not taken out, but at least the standard inducement has been taken out. Standard inducement has been taken out, and you can see this structure price is really attempting again, because this inducement must be taken out for this price to go up. You can see it almost up to that supply, but don't be surprised to see this price mitigating this supply and coming down, take out this major inducement and going back to the supply before you get a really drop to the downside. So this is an internal structure, weekly, which you can only see it clearly on daily structure. So you can see according to this daily time frame, after taking out an according to daily time frame, this is a major inducement on daily time frame because this is the first pullback, then here internal, major, internal, and push. So these, all of these pullbacks, this is the source of them, of the all source of this low. So price came here and went higher. So price, look at this is just an internal structure here. Inducement, normal inducement taken out. Price played around, went down, broke the structure. These are protected high. Price went there, took out that high, that's a change of character, took out a major inducement here, and the mitigation of this shadow, which is an order block. If you switch to a different time frame, maybe a 4 hours, you're likely to see that level acting as a very, very nice demand, depending on how you understand the structure. We change the time frame, you can see if you come to 4 hours here, you're likely to see this as a 4 hours demand zone, which is which price will just come mitigate the first demand, and this is a push to the upside. So let me go back to the daily time frame very quick. Price broke that structure price for it to go higher again. High possibility, we need it to come down, sorry. We need this price to drop, take out this inducement and push to the upside. And probably if we come to take out inducement, maybe to get to this zone, and we get to see the push to the upside. So at least again, technically, I'm expecting the dollar to drop before going higher. So look at it on, how do you call this, on a 4 hours time frame, and I can see there's that drop, and this one is not an OB, this is a fake move that will not hold that price there. So let's see, you can see price trying to react in this zone, but still gonna go down. So let's go there, and we see regardless of the situation, even if it was 15 minutes, this low was supposed to be taken out, so the price might go higher. For example, there's a possibility of this price doing this. It's a first pullback, minor. So it can take out this one or this one here, and go to the downside. We're likely to see that. So those are the possibility I have. So once I have those ideas, then I'm really expecting to see the New Zealand dollar going to the upside. And you can see according to the New Zealand dollar, because we're expecting that push, number one, there's a minor inducement there, which is very small, very small inducement. Very small inducement here. In fact, this is not valid. It's very small. It's a very small inducement. Better take out this one, just a normal, almost inducement should be taken out, but at least you can see the market structure. Pullback, small pullback. Price created this one. Went away. On my technicals, if you check my previous video, I said that until this low is taken out, mitigate this on, then we can try to go higher. But if you are late and you didn't catch this move, what you can do, there's two ways. Price has done this, let it go higher and break this structure. And you know that the price is not going just to go up like that. Price is gonna do this. Mitigation of this demand here. This is an inducement, let it go higher and break that structure. If it comes down and mitigates another block like this one, then you can do it. You can buy to the upside. But as for now, this structure is not yet matured and it's not good to buy from. As well, if you try to put our ideas from the left side, let me see if there's anything that can support this push to the upside. Now, if you're going to choose this area from the left, then you need to choose the body of this candle. This from the body. I think the body works better. So there's two ways of trading this on. And from the body, you can see almost mitigated, but not yet. So be patient and wait for next week, because today's Friday. Wait for the next week and wait for a better information if you want to buy. So I hope that one is enough. So guys, make sure that you watch the other video I made earlier on technical analysis, and just expect that push to the upside. And I think once we get a very good defined zone, then we'll make a new video for the direction of the market to the upside. Otherwise, guys, I'll see you soon. Make sure that you subscribe to the YouTube channel, leave your comment, and also make sure that you join our Telegram community.